But we've also got, of course, Hindustan Zinc in focus given the numbers yesterday, and lower prices have taken the shine off the Q2 earnings this time around. So will cost pressures ease? What's the guidance looking like? What other key triggers are we watching out for? Those are some of the things we'll discuss with the management as they join us this morning. And we'll also talk to them about whether or not Vedanta will get to buy the government stake in Hind Zinc as well. Sunil Duggal is joining us, the CEO at the company. Sunil, good to have you with us. While pricing has hurt the company's profitability this quarter, volumes have also exacerbated the issue. What led to the lower grades at the SK mines, and what were the issues at Dariba? If you could just talk us through really what perhaps you're seeing in terms of grade slippage. Is that still continuing to be a problem, and some of the key factors at play this time?
So it is the lower grade issue and a little bit of the volume challenges also we face. So I think when we were going deeper, we were developing the paste fill plants at this location. One was already commissioned as the volume was rising. So I think we were to put up a new paste fill plant, which got commissioned last quarter. So this quarter we faced some geotech issues, which were more to do with the mining sequence and how the ore body behaved at that depth. So which resulted into the volume extraction issues from that level, and to compensate that, we had to extract the material from some other part of the mine, which was a lower grade. So a combination of that resulted into the overall weighted average lower grade, which impacted both our metal volume and as well as the silver. As you know, Sindeswar Khurd is a silver-rich mine. So if the volume gets impacted from Sindeswar Khurd and the grade gets impacted, it results into the lower volume of silver and metal. So this was primarily one of the reasons for the company as a whole. If we look at other mines, Rampura Gucha, Dariba, our Zawar mine, the volumes have gone up. And similarly at our Kayad mine, which is in Ajmer, we were passing through a mining sequence where the ore body was little thinner and the grades were also lower. So it impacted the overall the metal performance, which was almost muted compared to the similar quarter last year and the previous quarter. That means the Q1. But what we have done, learning from what has happened in SK, and the similar problem we anticipated in the quarter one. We took some actions in quarter two, but the results have already started coming in October. We have developed 5-6 areas where the mining is going on, and there is always already uptake in the current quarter where the volume from SK mine has gone up by around 30% compared to the last month, and the silver grades are also higher. So this will set us up for a better quarter, current quarter and the next quarter. Similarly, we are taking action in other mines where the volume growth will be there, and that is why we are expecting that compared to the quarter one and quarter two, we'll have much better bonanza and much better quarter, that is quarter three and quarter four.
What was the average realization drop that you witnessed in zinc, and how did the entire surge in silver prices play out for you?
Average NSR was around $2,500, including premium. So the LME was $2,300 odd, and the net effective premium was around $200. So net the NSR, the average NSR was around $2,500. After that, what we have seen in the last few weeks, there is an uptrend in the LME, and current LME, as you see, is already 2,550. And looking at the metal stocks and the volumes which were to come up from both the smelters and the mine, those volumes have not flown, which has always been a trend. The market has been expecting that the volume will grow from some of the upcoming mines, like Century Mine or some of the other mines which were coming up. Those volumes have not come up, and that is why the gap of the stocks has not been filled up, and that is why there's an uptrend now. And my own belief is that in the next 2 quarters or so, you will see the LME again touching $3,000.
Mr. Duggal, about $3,000 for zinc prices, that would be great. But that means you expect zinc to stay in a deficit and that your NSR will improve even more. Can we assume that?
Of course, it will reflect into the NSR. If the LME stays at $3,000, goes to $3,000, so NSR could be $3,200. So looking at the global volumes and the smelter production, some of the smelters which had the issues like, there was a fire in some of the smelter in Australia, Brazil, where the volume has still not been, coming, as well as China. China demand also has grown in the last quarter to the extent of 1.5% or so. The result of overall, all these issues is such that against the expectations, the stocks have not filled in, and still today also the stocks are standing at 3 to 4 days of the global consumption, which is historical low and which is not filling up.
Now, why have you reduced your overall capex guidance for FY20?
No, actually, this is the actual spending which has taken place, and depending on how the projects have progressed, some of the payment will fall due next year. So it is only a flow of the payment which will come as the project get matured and completed. This is only time factor.
Mr. Duggal, I'm sure everyone on the street is curious to know what is the update on divestment, because it's a toss right now between a strategic sale versus the open market sale by the government. Have you received any communication from the government? Has there been any progress on these talks?
I think all options are open before us. We are evaluating which option and which card we have to open up. So this is what I can say. Otherwise, it is a board matter. It is a matter of Vedanta. I can tell you that all options are open before us, and we are quite excited about it.
All right. Thanks for joining in, and we wish you all the very best. That's the word coming in from the management of Hindustan Zinc.